Another real estate warning sign, another frontline report. Hey everybody, Scott Walters, buckle up, strap in. We got a hard hitting, pull no punches, no sugarcoating it, no rainbows or sunshine. I'm just going to give it to you and give it to you straight. We got a good one to unpackage today. Welcome to the show. I hope everybody's doing great. So let's jump back on the real estate merry-go-round and examine the good, the bad, and maybe a little bit of the ugly.
No, Scott, not the ugly. Only examine rainbows and sunshine.
No. Somebody's got to read between the lines and look between the economic cracks. And friends, that's my job, to raise awareness, ring the bell, sound the alarm, and let people know the biggest artificially induced housing bubble ever witnessed in human history might not sustain itself. Even as a real estate agent, own real estate, I'll take a hit in the next downturn, but this time I'm much more prepared. I've seen this movie before, which is why I'm with you today, even as a licensed real estate agent who loves real estate, wants to see you all win in real estate. My job is to protect you, and that's what I'll continue to do. We can buy today, tomorrow, next week, as long as it's done right. There's a lot of opportunity out there, but we're seeing a lot of areas now falling apart. And one of the things that we really have to monitor right now is the amount of investor involvement that got involved with this real estate bubble. The last real estate bubble had its share of investor involvement, but this one had it on steroids, that cheap money. But unfortunately now the writing is on the wall. Price declines in inventory are spiking. And I have always said this real estate bubble was like a game of musical chairs, and the music stops playing. And unfortunately, these builders got stuck without a seat at the game. They are in big trouble. Now, a lot of these projects, we're going to look, it was in Central California a few days ago, and I stopped by to look at a development, nice luxury golf course. Would love to live there myself. And maybe if the prices get down to the point where I think it's time to strike, you might see me there. I might be filming from the golf course. But the reality is this: I'm perfectly happy where I'm at. I don't need a house to make myself feel any better about myself. If you're basing your self-worth on a house, you will never be happy. You're better off sacrificing now, be willing to live in a cracker box temporarily, and ride off into the sunset later. If you need help, you reach out to me. Happy to help you with any of your real estate needs. But the reality is this: a lot of these builders that are building homes, and the luxury home market is going to take a hit. Everything will take a hit. In my opinion, for investment properties, you always want to target, affordable homes. Affordable homes will always be in demand, especially rentals. So if bought right, that's what we can do. But the luxury market caters to a niche market, and a lot of these people, even if they hear whispers of recession, will start to recess too, even if they have money. But here, it gets better or worse, depending on how you look at it. Insanity, this stuff. So when you're a builder, you get funding. You get funding to do these construction projects. These projects have been funded. And so they're going to complete. You've probably seen reports of a lot of builders still out there building. Why, you ask? Well, of course I'm going to tell you. Because they've been funded, and they're going to make their money. They know these homes, most likely, there is a good chance they're going to end up going back to the bank, going into foreclosure, whatever the case may be. They know they're in a game of musical chairs. Now, a lot of them possibly are short-sighted, thinking if we build it, they will come. But the reality is this. Here's the challenge. Usually these construction projects go in phases. We're going to look at the one I drove by and checked out here in a second. Just to drive a point home. But the reality is this: they start in phases. Phase one, they build their model homes, their tour homes. You fall in love with the homes. I call them FOMO factories, where they basically cater to bubble buyers. Fall in love with furnishings and finishes staged to perfection under a think tank. That is what they're designed to do: get you to fall in love with the model unit, and then you wait for years to be built. And it's wherever, stacked into some sardine can row of houses, or in the back 40. And looks nothing like the model home you toured. It's white, blank, and empty. Nothing like, and then you're going to have to pay to furnish it. Now, of course, if you got an open checkbook policy, you're more than willing to do that. But here's where it gets better, or worse again, like I said. You see, if you bought in phase one at, let's say, $1 million, and now you're on phase four, they're trying to complete these last phases of these developments. And that's why you're seeing these offers for rate buy downs, free upgrades, anything but reducing the price. Because if they start reducing the prices, that means they have to sell through the rest, more than likely at a reduced price from where their projected earnings originally were when they forecasted it and got these projects funded. That's where the hiccup lies. And so the reality is this. When you bought in phase 1 for $1 million and you see them now selling for $800,000 in phase 4, your property's now underwater. You're an upside down owner, and I've warned about this. Over 10 million people bought at the very tippy top of this bubble. Over 10 million. That is enough to cascade into a foreclosure crisis, I'm afraid to say. So we're seeing a lot of people. And for me, well, let's save what my thoughts are around the way to purchase real estate, the safest way. Now, again, everybody's different. If this is your forever home, open checkbook policy. I deal with a lot of people like that. They're like, this is a forever home. We don't care what it does. I'm dealing with clients with that, like that right now. I don't care. I want my house. I can afford it. I'm all cash. If it goes upside down in value, whatever. Usually it'll climb back out. Unfortunately, it's going to take another real estate bubble to pull this thing out of what it's about to go through, which is price declines. Just like in 2008, a lot of people that purchased in that era, had they held on to those properties during the pandemic, that this current real estate bubble pulled all those properties back out of where they were at, upside down. So let's jump over and just take a quick peek of a Central California housing project and see what's going on, how hustling and bustling it is there, and then we'll meet back here and wrap it up. Let's get started. Friends, buckle up, strap in, roll up your windows, lock your doors. Here's a recent luxury home development that I went to visit, and everything has come to a screeching halt. This was 24/7 construction not too long ago, and boom, it is all but ended. And here's all the people that bought homes in the first phase, and as we can see, it's surrounded by empty dirt lots, and they're still trying to finish just the ones that they've committed to. This is in fact happening all over the country as investors now found themselves in a game of musical chairs where the music has stopped playing. It's buyer beware at this point. Make sure you get in the hands of a great agent and they understand these waters. Most of them are going to sugarcoat it, and that's why I'm here. Let's get back to the studio and wrap this one up. All right, friends, welcome back, and there you go. So here's the thing. It's crickets there. They are winding it down. That project would have been trucks, workers. You saw it. Did you see it? I did. I drove through developments that couldn't hire people fast enough. And now with a lot of these undocumented workers that these companies were hiring as laborers, they're afraid to show up to these projects or they've been sent home to their countries. There's skeleton crews out there. And even with that aside, the touring homes are going down, contracts are going down, loans are going down, everything, prices are going down, inventory is going up. Everything, the writing is on the wall right now. The birth pains of another housing downturn. My question always to you guys is this. Because I'm in real estate and I deal with real estate and I talk to a lot of agents out there. And of course, agents have a vested interest. Of course, they don't want to say a real estate bubble. Even me, myself, here, if I'm selling homes locally or nationally, whatever, I do it all. And I talk to a lot of you guys. I help a lot of you. I usually always give it to you straight. But even there's times where I'm tempted here in my town, in the last downturn, and I always give it to people straight. We were the last to get hit and the first to climb out, but we took our hit. Nobody's safe in a deep cycle recession. Some will get hit harder, some will get hit quicker, some will climb out faster, but everybody's will get touched in a deep cycle recession. We're in the correctionary phase, and that's why you're seeing a lot of areas in the country still doing just fine. Just fine. And a lot of these areas are areas that are within the median home price average. If you're in the 3s, 4s, maybe the 5s, those areas are going to do a lot better than the areas like where I'm sitting, where it went from about $900,000 for your median home price average to $1.5 million. Everything doubled overnight, artificially. There was no organic growth. It was market manipulation, and the investors now are joining the party in a game of musical chairs that, in fact, has stopped. In final thoughts, I come to you as a friend, as a content creator, as a real estate guy that wants to see you not only win in real estate, win in life. Understand the waters you're swimming in now. They're shark infested. Investors, welcome to the swimming pool. We took a look at a project today that's basically coming to a grinding halt. You now are just trying to finish off the homes that you're committed to, but you know very well that the market has changed significantly. These investors are no longer going after new acquisitions and land to build on. They're just trying to finish the projects that they've already committed to. But that's why I'll be here to blow the lid off it every step of the way, because it's not only what we need, it's in fact what we deserve. If you appreciate the content, I want to humbly ask you to give the video a like, subscribe to the channel, leave a comment below. I'd love to hear from you. Social media links in the description of this video if you'd like to follow me there, along with links to channels I've appeared on I think you might enjoy. If you need help buying or selling real estate here in America, I have the biggest network of top-rated agents in the nation ready to assist you. It would be our honor and our privilege to do so. Email in the description for you as well. Also, if you're watching from your television set today and you enjoyed this video, you're going to love the next video, and there's an easy subscribe icon for your convenience. As always, thank you for your time. Please go make it count today. God bless, and I'll see you on the next video.